Welcome back to another Stock Market Open Live. Today we have Ethereum approved ETFs and crypto that's barely moved on that. Not a horrible surprise given that as soon as it seemed like the SEC was going to be likely to approve these, we pretty much immediately got our movement off of 3,000 on Ethereum, and we immediately got our jump. Not a terrible surprise, therefore, but somewhat, I guess I would say, eyebrow raising. That it felt like there was maybe a 1 minute period where we had a 1 or 2 minute period where you actually had a green candlestick, and then it was just straight back to back to normal. Kind of wild. So. That was yesterday. At the same time, we had Ethereum barely move. We also had BTC barely move. Both of them in roughly the same spot. BTC sitting about 67.4, Ethereum 37ish, which is where roughly where that 37.64 line is that Ethereum's been very excited about. So in other words, you can see here where the announcement, or I shouldn't say announcement, but rather the speculation came in that, oh, it's going to happen. And we took Ethereum right from 3,000 all the way to about 3,700. It's about 22-ish%. Pretty good. Got to give it to them. Ethereum group. Then you've got the Qs over here, up about 22 basis points after yesterday's sort of sell down yesterday. Yesterday was interesting. I mean, look at this. Tesla went all the way down to 174 after it lost its 182 level. So you had a pretty remarkable move yesterday. I mean, after we lost or heard Jim Cramer really go bullish on Tesla, a lot of folks were concerned that this is bearish for the day, and the stock moved down roughly about 5% from that moment to about where it closed, given that the stock was up when the market wasn't open yet. As far as NVIDIA, you've got NVIDIA here touching the 1050 line. It played 1050 quite a lot yesterday, so it doesn't surprise me that we're seeing 1050 getting played again here. Sort of round numbers on NVIDIA. Enphase is rejecting off of the 119 level. Super microcomputer went all the way down to 850. Now, this was pretty wild. Let's see here. Oh, yeah, the volume is a little low. Sorry about that. Let's see here. Let's fix that for you. And there we go. That should be a little better. So, one of the wild things about super microcomputer is yesterday, and this is what I always suggest to folks who are part of the Stocks and Psych group, is when I send out ideas, keep in mind they're ideas that you can play around in terms of trading, and you kind of have to come up with your own strategy around it. But I went in and out on shorts yesterday, quite a lot on Supermicro, and took about 60, 70K and kind of kept playing it, and ended up on the P&L about 130 yesterday, which was really, really good. But if I held my original position rather than swinging in and out of it, which would have been a lot more risky to hold it, my original position was buying the 850 puts for $1.80. Those $1.80 puts, even on the low side here, turned into $16.80. At one point, they were as high as $22. It's pretty wild. So I mean, it was somewhere between a 10 to 12x there at one point on that particular option contract, which is really remarkable. I think it's because the 850 was put I entered when this thing was trading for like 920. So, from a statistical point of view, it should have been extremely improbable for the stock to actually go there. But it did. In fact, it ended, $2.62 under 850, so that option became in the money. And boy, that really helped the valuation pretty quickly. So, kind of wild. So really good trading day yesterday on Supermicro, specifically with shorting the AI adjacent basically right after the NVIDIA run and enthusiasm in the morning wore off. So let's see how today goes. We'll have, I don't know if we'll have a continuation of what we had yesterday with NVIDIA or Supermicro, but we'll find out. Enphase again sitting at 118. Getting sort of rejected there by that 119 line. And yeah, we'll get to do some exploring of how the market behaves today. Let's see what's moving largely to the upside or downside. You've got Faraday Futures sitting at about $1.30. And Greenwave Technology, both green for now a second day in a row. Up, what is this? 5.3%. What is this? Mr. Sec here says, what happened to Tesla short squeeze? This is intraday, bro. This is an intraday. Doesn't these you have to keep in mind when stocks move violently in one direction, the next day is a complete reset to expectations around it. And so you could get the complete opposite thing happening the next day. So Tesla moved 6.66% in one day on what I thought was basically no news or quite frankly nonsense. And so I thought the rapidity of that, or how rapidly Tesla moved, that was reminiscent of almost a short squeeze. It was remarkable how quickly Tesla moved. And I remember when we went into close that day, thinking and then posting in the stocks and site group, I'm like, I'm not going to hold an option overnight on this because I have zero clue if this is going to continue today or tomorrow. And if it continues tomorrow, I can always just re-enter right at open with an option. And if there's any kind of gain overnight, I'll lose that. But I'm okay with that to avoid the risk that, theta decay for a day and the potential for going in the opposite direction happens. So, yeah, trading's not very binary. You have to go in and out or realize that things change very rapidly. So, let's see here. What do we have here? Fed's sentiment neutral as beige book key to June meeting. Boring. That's boring. So then you've got, durable good orders just came in 5 minutes ago. They actually came in a lot better than expected. They came in at 0.7 versus the negative 0.8 survey. Transportation came in 0.4, so when you move in transportation, you get a nice beat there as well. And then capital good orders, non-defensives, Air beat at 0.3, and then Air capital good shipments beat at 0.4, both versus the 0.1. Now, you did revise the prior much lower, way lower. The prior durable goods read was 2.6%, which was revised all the way down to 0.8%. So you have this huge revision down for last month. That's a little bizarre. Let's see if they're saying anything about it here.
If that starts to temper or we see some uplift, that could really, change the story here. Goods, gasoline prices, obviously, headline inflation, very sensitive to that. And the reason that, again, matters is that we still have this ongoing stickiness in the service side of the economy, whether it's core services or also looking at rental inflation.
And Kathy, this is the reason why people are talking about whether there is some sort of restrictiveness currently in the system. Alberto, you wrote a fascinating note about this, just how restrictive Fed policy actually is and how it's sort of, a mirage that they're using front end of the yield curve to try to seem like they're restrictive, but they're really not so much. Please explain, because to me, this is fascinating at a time where people are pushing back their expectations of a rate cut.
Good morning, Lisa. Essentially, what we're talking about is the Fed trying to perform a magic trick. They have focused the audience attention on the front-end rate, and they've raised front-end rates by 500 basis points. But on the other hand, what they're doing is to reducing the pace of tapering, and they've reduced it by more than expected. So the Fed balance sheet is still, very large, and it hasn't really fallen since the peak. At the same time, there's also a lot of fiscal and there's indirect QE. For example, the long-term funding program has allowed banks to fund cheaply to buy treasuries. So, they're hiking with one hand, they are not hiking with the other. The result is that there is a record loose financial conditions. So we definitely don't see any restrictiveness in financial conditions right now, unless you're a weak household and you're funding with credit cards or auto loans, so you're depending on the front end rate. But for large firms, for whoever funds,
it's a pretty good comparison here. This is their explanation here. This idea of like, hey, at the same time as they're trying to stay higher for longer, they're loosening, by reducing their QT. It's a really good point.
In the economy or persistent inflation, hurting the rates market rather than the recession that, every economist has been thinking about for the past 3 years.
Well, Alberto, we got a fresh call from Goldman Sachs this morning saying that they now expect a cut to be in September. Initially, they were talking about, most recently, they were talking about July. What do you view in terms of the timeline, given what you're saying about the policy not being so restrictive?
I think here the trade is for next year. Yes, we might have one cut this year. Our forecast is still for 0. But the reality is there's still a lot of cuts that are priced in for 2025. And I think that is wrong, especially with the outlook that we have for elections. We're going to have a lot of fiscal stimulus next year, regardless of who wins. But, there are some scenarios where there's even more fiscal stimulus than the CBO is expecting for next year. So we have persistent fiscal. And, the 80 plus basis points cuts that we are seeing in the market for next year are not going to happen in our view. So, yes, we might have a cut, but it's going to look like a policy error in our view. And, even other central banks are starting to change the narrative. So we need to learn to live with higher for longer. And there's a lot of asset allocation that has been centered around the expectation of lower rates. And that's going to have to reprice.
Kathy, I know you also think cuts could be delayed in a certain scenario.
It's a really good point. Just this, don't be betting on so many rate cuts next year. Like, one cut, 2 cut, who cares? It doesn't matter. This is a really good point.
Yeah, I'm not so sure we get a lot of fiscal stimulus next year. Certainly, if we do, then that would delay, or dampen Fed rate cuts. But I think. From my perspective, we are seeing some moderation in economic activity. Right now, it's just the first step. And there's a long ways to go in terms of economic activity and also inflation. But we're still hopeful that we do get, some further drop in inflation, particularly if we think rental inflation. But the problem is it may be brief, right? Because we've seen some signs of rental inflation picking up and home prices picking up. The problem is there's long lags, right? Typically it's about 12 months. This time it seems to be longer. But so we're hopeful that we do get, further cooling in inflation. I think that's really what matters most for the Fed. And I would agree with Roberto. There's
yeah, he's arguing that if either president wins, there'll be more fiscal stimulus, which could lead to more inflation, therefore reduce the number of rate cuts that you would actually end up getting in 2025 anyway.
A household or
not so great for the interest rate sensitives.
Borrower, you are feeling the pinch, and I think higher rates have had an impact. Look at the housing market. The existing home sales market has been essentially stalled.
And that's potentially part of the reason that small caps, for example, haven't kept up with the gains. Alberto, in this idea that policy is easy, not just because of the fiscal, but because of QT2, the Fed would say to that they are slowing the drawdown of the balance sheet, not because they want to ultimately not draw down as much, but it allows them to do it for longer and potentially ultimately get to a lower level because they can keep drawing down without the risk of any financial accident. What would you say to that?
Well, the first phase has been very easy for central banks because inflation came down thanks to an easing of supply constraints, and also we had a very strong inflow of immigration, of relatively cheap labor. Now, these one-off positives are going to fade. So the first phase of disinflation has been much easier. Now it's, the hard part is what's ahead of us. So we have, less flow of immigration, and we actually have, still supply constraints that are persistent. And there are some feedback loops. So the idea of keeping the balance sheet very large and making it come down very slowly, in theory, looks good. But in practice, what it does is that it keeps financial conditions loose for a large chunk of the economy. So there's no real tightening for large firms, for mortgage borrowers that are long-term. And so I think that the result of higher front end, but also persistent fiscal and a persistently large balance sheet has been that financial conditions are not as restrictive as the Fed thought they would be. And the narrative is changing. The narrative is changing. I think that some Fed presidents are already taking that into account, which means that you won't be able to do a lot of cuts. But the other consequence is that eventually some central banks will have to choose between price stability and financial stability. So it is true that it's really good to not cause any issues in the financial market, and no one wants it ahead of elections. But the mandate is also price stability, and I think that there's been a lot of micromanagement of volatility from central banks. We see it in the allocation of risk assets. We see it in the love for credit and for carry that there is in the market right now. We're at record tight spreads, and investors, are essentially ignoring this front end 5% rate because the long end is inverted.
Kathy, would you just say to that Alberto's wrong because it's just a lag? That's actually what we're seeing, not that policy isn't tight enough?
Well, I have some sympathy to Alberto's comments. I mean, certainly financial conditions are easy. Part of that's because the equity market continues to rally so much, and we do have an inverted curve. But long-term rates are higher. I think in terms of the thing about mortgage borrowers, they're still looking at 7% rates. That's quite draconian, especially compared to where we were. And I think some corporations, if they have to come to market and roll over their debt, they are facing higher refinancing costs. But in general, yes. I mean, if you're an asset holder and you're a corporation that has a lot of cash and you termed out your debt, the short-term interest rates are not biting as much as the Fed had thought previously. And I think that is key. And I can see the Fed holding rates.
Yeah, I mean, she's basically agreeing that, hey, look, the Fed's interest rates aren't functioning, basically, like these high rates to slow down inflation as quickly as folks would like. And in part, it's probably because Alberto's right, because financial conditions are loose. As you're forecasting rate cuts, trying to loosen conditions and lessen QT, you're really purposely keeping financial conditions looser, accepting a higher balance sheet, right? That's something he mentioned as well. Higher balance sheet, which will make the second half of inflation much harder to get down. That's his opinion. So that'll be really interesting. And I think that's where, a lot of folks are saying, okay, how much goods deflation can we get? I think this, frankly, is why Jerome Powell was thinking, hey, let's get an average of the three buckets. I think he's sort of betting on goods deflation, like big deflation in goods.
More on the upside, but it hasn't had an impact overall on spending in a while because gas prices have been sort of in this range for some time.
Well, and this is a reason why, Kathy, a lot of people were looking at this expectation that we were going to end up with a really crimped consumer where you had savings running out and you had some of these inflationary pressures, people talking about a commodity shock. None of it materialized. So where are we on that? Do we have a consumer that has run out of savings and is increasingly strapped? Or do we have a consumer that can tap leverage, that has plenty of capacity, and particularly at the higher end, still tons of money?
So I would say more in the
I'll just jump in here. There's definitely a lot of dalahala available to be spent, especially amongst the higher incomes. And that's where, there's this comment here. Sol Investing says, the market is held all-time high and my rate-sensitive portfolio is crashing. Tesla, Square, Enphase, SolarEdge, Palantir. I generally wouldn't throw Palantir into the rate-sensitive bucket. It's done decently. I mean, it's up from $9, right? It's just crashing sort of at the more near-term higher end. That's sort of like Apple going from, nearly 200 back to 169 and now heading back into the 190s again. But I mean, as far as like Tesla and Enphase, for example, I think if you initially have a recession, it's very bad initially for Enphase, Tesla, and frankly just everything, because you'd have a shock. But after the initial shock, I would expect that interest rates would decline very, very rapidly. And on that sort of announcement, I actually expect that Enphase and Tesla would do exceptionally well during a sort of a recession or some sort of shock, because that shock would have forced interest rates down substantially. And then those who have money will be able to utilize those low rates to go get a new car, to get solar panels for their home or whatever. And once again, the rich get richer. So unfortunately, we're not in that sort of environment. You know, one of the reasons I was actually bullish Tesla was because I thought we were going to go into a recession. The problem is, because of fiscal spending or artificial intelligence, we didn't end up getting a recession, which left interest rates really high, for way higher than anybody expected, right? Well, I mean, look, back when we were doing interest rate liftoff, I don't think people were really forecasting that rates would go to 5.25%. You know, there were people that were like, oh, we're gonna break 4%, and people are like, no, say it ain't so. You know, I know there's always the little edge case where somebody's like, it's gonna go to 8%, whatever. But certainly the mainstream consensus was not that we're gonna go to 5.25%. Now here we are, and we've been here for a very long time already. We're coming up on a year that we've been at 5.25%. So, you know, it's terrible, frankly, for the interest rate sensitives. So it's like a slow bleed. I mean, Tesla just announced that they're, what was it? They're cutting some Model Y production this summer in China. Let me see what it was. Let's see here. Tesla China planned to cut Model Y production by at least 20% in March to June. Let me see here, but that's backward looking as well. And I know people don't like this publication, so take it for what it's worth. But Reuters suggests Tesla has cut the output of its best-selling Model Y by a double-digit percentage at Shanghai since March, according to an industry data source. Keep in mind, that might be why also we're seeing that 0% financing on the Model Y, just because inventory is backed up a little bit on the Model Ys. But it does seem like that that interest rate support is actually helping. But yeah, I don't know if that plan is still in effect now. I think that matters. But it is interesting. I don't know how much it matters. Now, with this lower interest rate that they're offering, which I know Tesla has to subsidize, it's maybe not so terrible. But anyway, let's pop in over here for a moment, and let's see what they got over at CNBC.
For live music, this is about the extraction of monopoly rents through abuses.
I appreciate that. I'm trying to get to push you to see if you can actually just quantify, though, what percentage of a ticket sale you think is effectively a monopoly extraction.
So it's important to note, Andrew, that we are not required to identify or quantify a specific percentage that is monopoly rents. The antitrust laws are concerned with subversion of the competitive process, the fact that the market is not functioning as it was intended because of anti-competitive practices. And so there is, this is really a beginning and not an end. There will be discovery, there will be expert discovery, and there will be opportunities to explain both in terms of price, but also quality and loss of innovation.
Yeah, all right. This is antitrust stuff. It's gonna be interesting. Let's see here. Okay, so no, Steve, I don't, I don't think the expectation is, I mean, you had the auto companies almost go bankrupt in the 2008 recession. I think the idea is that a company like Tesla is still small enough to where it is not sort of like your daily good, like a Ford or a GM. It still appeals more to your mid to upper income customer, right? If the average income's $50K, then really, frankly, broadly, the average car buyer is somebody making $50, $60K. But the median income of somebody with a Tesla is somewhere like the $130,000 a year range. So you have a different cohort. So, but also, Steve, I saw you comment about the Shanghai Freight Index. I actually do think that's a problem, though it seems like a lot of it is driven by expectations around the Red Sea, partly because, I mean, the Red Sea disaster has been going on really since about the October Israel disaster. And so this is where you could see the spike in these freight prices really started hitting, quite frankly, around January is when we started getting those increases in freight costs. And the trend is not great. Part of the reason this is just continuing to go on is because the issue in, frankly, the Red Sea is still going on. The United States' ability to provide stability in the Red Sea has just been lessened. And so you have longer shipping time frames. You have reallocation of resources to try to balance out these more expensive freight rates in the area. And then you have more demand that's being ordered to try to minimize the potential for supply chain disruptions for objects that are going through that area. Like, let's say you need, I don't know, number 123 bolt for a certain Tesla from China, right? And it's supposed to go to Berlin. Well, you're gonna increase your orders for that bolt because it's gonna take a little longer for you to get them, and you might be uncertain that you'll be able to continue to get those even in that new time frame, given the disruption that the Red Sea has caused. So, a lot of this right here, Red Sea disruption. The question is, are we going to be able to get back to these $900 freight rates, or are we going back to, $3,000, $4,000, $5,000, and up to $10,000 plus that we've seen before on some of these? I know they don't have this in the chart, but yeah, it'll be really, really interesting. So 10K would be more like what we saw from like China to LA and such. But anyway, I think this is very interesting. So, okay, let's go back over here.
Obviously, we...
no, it's honestly, this is a little boring, the Live Nation stuff. Antitrust, speculation. Call me when there's someone who's figured it out.
Marie, what kind of stands out to you? What's your final thought?
Well, I'm looking ahead to the University of Michigan sentiment. I want to know where the
7 o'clock today
is on inflation, even if you don't always trust the data. And this sparked my attention today from Paul Donovan over at UBS. Politicians weaponize economic statistics, particularly at election time, to paraphrase that iconic economic resource, the Princess Bride. The voters' response is often, quote, "You keep using that data. I do not think it means what you think it means." Economic data does not win votes. People are not feeling good about the economy, even though, to Danny's point earlier, Biden will come out and say the data is showing that the economy is doing well.
Which is a reason why you heard Janet Yellen saying, basically, inflation is too high. I understand how people feel. We've got to do more. We're doing our best. We've made some progress, trying to toe that line between basically heralding progress, but also talking about just acknowledging what people are feeling. Danny, what's your takeaway? I mean, basically, we're hearing about AI is going to save the world, and every robot under the sun is basically going to make us all richer, better, and thinner. And then you've got other people saying, just hold on a second. We haven't killed the business cycle.
Yeah, well, it's clearly not going to save the stock market if you can get a day where NVIDIA rallies nearly 10% and the rest of the market, albeit by a small amount, is down. It's this philosophical debate that I think is really interesting. Is AI going to give us the productivity boost that the 90s saw? And even here, Lisa, we had two very different opinions. You have Ian Shepherdson saying that, no, it's not, because the rollout of that, it's not like the internet where everyone can just go online and sign up for a website. It takes time to incorporate AI, whereas Jay Ploski basically saying, the infrastructure is there and it's being built up really rapidly.
I mean, that is also true. You get this sort of like lagging productivity boost to incorporate AI. Like, Christian's message here is, can you summarize Palantir versus Snow? And you have to think about it. Snow was much more heavily focused on commerce. So was it like 700 of the largest 2,000, Forbes 2,000 companies use Snowflake. And so Palantir's really started as a government big data source, and Snow is the commercial big data source, and Palantir's but doing whatever they can to grow in the commercial space, which is great for them. They're obviously different platforms, but the idea is the same, that you can gain insights from big data. So I think they're actually both very, very interesting, and I think they're both real AI plays. But it takes time for companies to pull the trigger on more spending, especially in an environment where stocks are rewarded for cutting spending. And I actually think in the near term that hurts Palantir and Snow a little bit, just because you have a little bit more of sort of tight wallets, if you will, on corporate spend. However, I think that'll change Oh, yeah, literally just now. Yemen's Houthis say they targeted the Essex ship in the Mediterranean Sea. So look at that. And the Red Sea, a Yada ship in the Red Sea. So now you literally have the Houthis expanding their attacks to not just the Red Sea, but also north of that in the Mediterranean Sea, which is also quite remarkable because it feels like, is it like San Francisco where there's just like no like enforcement of international customs or laws? Hell, whatever. But yeah, I mean, those are sort of the things that drive up these inflationary effects. So then you got SunPower here. Look at that, SunPower. This has been one of the momentum movers. It's up about 12.95 here in the morning, and along with Faraday Futures, this momentum mover here. AM Sizzles over here. AM Sizzle. Sitting at about 2.3%. That is after it was down 10% yesterday, which is quite remarkable. Oftentimes, AMC had run into the close. I was watching AMC yesterday too, but boy, I was not expecting it to give up that heavily. Then you've got Supermicro still holding on to about that 862, trying to get above that 850 figure. That was pretty depressive yesterday. And Phase sitting at still about that 119 level, getting rejected. 1050 reject on Nvidia. Tesla is up 39 bips at 174. Q's up 30 basis points. So slowly moving up here on the Qzels. And you've got, you're sitting about 4.5 on the 10-year. The 2-year Treasury yield right now is sitting at about 4.95, which puts our inversion at roughly 45 points. We've actually gone deeper into inversion. Wow, I didn't even realize that. That would have just had to have been over the last couple weeks here, that the inversion is at, yep. Since May 3rd, which is roughly, let's see, 2 weeks, 14, it was 3 weeks ago. 3 weeks ago, we capped out at negative 29 bips. We are now further inverting, which that's honestly not good. We are the most inverted right now. Oh, wow. That is weird. We are the most inverted right now, going all the way back to December of 2023, which is when we were pricing in 7 rate cuts. Wow. That's it. That's tweetable. Yield curve is as inverted as it was in December of back when we were pricing in 7 rate cuts. Market is still screaming recession is possible / likely. That's very interesting. All right. Did they come back?
Economic data.
No, not yet. Oh, you doomers. It's exactly 6. They should be back. There they go.
Better than expected because we have a strong economy. And as long as that's going to continue, stocks are going to be fine. And so when you look at Q1 results, earnings estimates going forward, the next 12 months have been raised to an all-time high. We're not sweating the Fed cutting, June, September, whenever. We're not sweating those issues. We're focused on the fact that earnings are solid, and that gives us the comfort to continue to stay fully invested.
Joining us now, we have Nadia Lovell. She is UBS Senior U.S. Equity Strategist. And Nadia, we're going to get to earnings and, of course, what comes after earnings. But actually, I want to talk about what happened yesterday. It was really interesting. You at NVIDIA finished the day 9% higher, but even still, the S&P 500 closing down 0.7%. You think about the week that was, tech is the only sector higher on the week. What does that say about breadth in this market right now?
No, we continue to think that breadth is broadening out and improving. And yesterday, of course, the last couple of...
Breadth improving is basically a way of saying more stocks are participating in the gains. Rolf Rentals, do you think it's ordinary necessary for me to buy your course and write it off for my company? mean, if your company benefit, like for example, if you have a let's just say like a rental LLC, and then you bought a property management course, that sounds necessary and ordinary to me. In fact, that's what most people do in the course. And I'm not a tax advisor or your CPA, certainly, but that sounds extremely reasonable to me. And a lot of people do that. A lot of people do that, like with the stocks and site group as well. They'll write that off against whatever trading profits they might have for the year or whatever. What does most inverted mean? Most inverted, most inverted would be like what we had last year, which was like negative, like the middle of last year, which was negative 100 basis points. I mean, you're just like screaming recession is coming. But, yeah. Kevin, do you have any SpaceX shares? No. Considering maybe getting my hands on some. But I haven't finalized that opinion or idea yet. Start your stream going over the weekly catalyst. Yeah, I mean, at the very least we can touch on the catalyst now, but it's not a bad idea. It sort of gives sort of a format to it. It's not a bad idea. Yeah, today we're really waiting for the University of Michigan consumer sentiment reports, which come out at 7 a.m. We'll cover them here. And then, of course, next week on the 31st, we'll get PCE, which PCE will coincide with a pretty large bump there in the pricing on the courses on building your wealth on the May 31st date. So make sure you get in before the 31st if you're interested in the courses. It'll also be the last chance to buy a ticket, whether VIP or normal, for the event in Vegas. After the end of this month, we have to submit how many people are coming and finalize sort of the guest list, if you will. And yeah, it's kind of almost already here. It's going to be a really cool event. You can see that at meetkevin.com. But anyway, what are your thoughts on the stock price of Tesla today? Do you think there's a chance it's going to go back up some today? Sure. I mean, obviously we'll see what happens in the next 26 minutes when the market actually opens. But yeah, it's after a rough day like yesterday would make sense to have a nice like up 1% day, but we'll see. Let's see. Alex says Snowflake is not a real AI play. They're behind their competitor who will go public soon, Databricks. They allow clusters for downstream machine learning. It's more about organization and connectivity. I mean, frankly, that's the organization of data and the connectivity of data and then gleaning insights from that data, especially if you could use artificial intelligence to help put those insights together, is an AI play. I remember when we were doing vision-based identification of wedge deals in the House Hack AI app, and people go, that's not AI. That's not AI. And it's like, yeah, it is. It's vision-based AI, just like FSD. But whatever. So let's see here. How long do I plan to offer trade alerts, and how soon after do I send? Yeah, I mean, my goal is always to send if I have an alert that I think is alertable on a trend. I send it usually within 1 to 3-ish minutes, I'd say, is the average. It just depends on how much of an explanation they write out. Sometimes it's like people will see a thing and they're like, why that trade? And so I have to type out the thesis. Sometimes I'll send the alert and then sort of type out the thesis. People seem to have preferred that. But the whole point, I just want to be clear on the trade alerts, because a lot of people are emailing us asking, or they're joining the course. The whole point of them is to give you a perspective on what I think the trend for the day is, or what trend I'm seeing, and then you can kind of take your trading skills and figure out what to do with that. So, like, I think it would be a mistake to try to perfectly copy every trade just by the virtue of even if you were capable of perfectly moving in and out, I can't trade for you. I can't give you advice. I can't, look at your portfolio and go, okay, you're going to go in this amount, and then you're going to be able to double down if it goes in the wrong way, right? So usually what people do, what I find, is if they see a trade alert and they're like, yeah, that's a good perspective, they'll pick like an option play or a share trade around that in their own way. So they might buy shares, they might get 60-day options, they might get 9-month options, they might, go more in the money, more out of the money, whatever. And so that's usually what I find that people do pretty well. Obviously, when it comes to trading, it's like I can't make any guarantees for what your performance is going to be. And that's not the point of this. The point of the course is to show you, like, look, here's how I do it. And, here's the fundamental analysis we do. Here are the course member live streams. Here are the perspectives that I have. Here are my opinions. Here's, how I'm trading XYZ or whatever. And then you can kind of apply that however you might like. I mean, that's just like making YouTube videos, right? It's like, hey, I think this is happening. So that's the whole point of them. And people are very, very excited about that. They really enjoy it. So anyway, let's listen over here.
Note out of Goldman before that launch.
What's the commission for trading for you? I don't trade for anybody. I'm a financial advisor, but I have no clients, and there's we for a little bit last year we did financial advice consults for folks, and I really enjoyed that. We looked at I think we looked at 37 people's situations where, we ran their credit, looked at their finances, retirement account, their real estate, or whatever. And the goal wasn't to say, like, all right, here's the same thing you've heard a million times before on the internet. The goal was really to say, what's the one thing in your life, or like the few things in your life that are really screwing up your financial situation right now? Like, what's the mindset that's messing you up? What's the one thing that's standing in your way of preventing you from getting ahead? And so what we did is we did 37 of these analyses, and then I'd put together a video and basically break out, okay, here's either what the problem is, or what the, how should I phrase it? Like what I would recommend you do. And see, that was cool because it was actually financial advice. You have to have a contract. It was kind of great. But people really seem to enjoy that. What we did then is, let me see here. Let's see here. Yeah, okay. Yeah. So anyway, hopefully that's not too much information. But anyway, let's go back over here. Yeah, let's go in here for a moment.
It seems like everyone was singing from the same hymn sheet and leaning more hawkish to the higher for longer sort of narrative. I mean, Chairman Powell did try to remove the possibility of a hike from the in the press conference earlier this month, but clearly the minute sends a different message. But we do think that when you get core PCE next week, you will see progress on inflation. We're looking for 0.25%, and year over year, that's 2.7%. So again, it's still above the target, but not far from where the Fed wants it to be by the end of the year. So we think that by the time you get into September, progress made on inflation, labor market is softening but still solid, that the Fed will have enough data in hand to start to ease.
So maybe the stock market rally, it doesn't need a rate cut, but if the Fed were to hike rates, if they actually did have to lift rates beyond where we are right now, what would that mean for bulls?
It would create a headwind from a valuation standpoint. We have forward PE multiples that are over 21 times. We also have some areas of the markets that are particularly sensitive to the interest rate environment, not only from a sector standpoint, but also from a size standpoint, particularly small cap. So you could see some weakness in that if the sort of higher inserts itself again. But we think that that is a low probability. It's not a zero probability, but highly.
All right, this is a little boring. We keep going here. Keep up the good work. Oh, thank you for that. Yeah. Yeah, no, I don't know if I... See, I actually... I mean, you should know me. Somebody's like, if you have $1 million to gamble on a stock to 10x for the next 10 years, which would it be? I mean, you're asking like somebody who changes their mind often. And so that's not a good person to ask for that 10-year mindset. And I do that because the data just changes a lot. Like I thought rates would come down rapidly because of a recession. Boy, that was very wrong. So like the interest rate sensitive play was very wrong. But honestly, I have to say, I used to get offended when people were like, "Oh, you're just a trader," trading stocks. And now I'm like, damn, I wish I was trading all of the last 2 years during this crisis. Because you know, I went short ARK K in November of 2021, but I always had this feeling like, oh, but you got a diamond hand or whatever. It's like, you can trade. It's like so freeing. And so I really started trading almost daily in March of this year. And I took a portfolio that actually had some slight realized losses, and we turned it into this right here. I tweeted about this. $1 million of year-to-date realized P&L. It's a $2 million account now. Just yesterday we hit it, because yesterday was like a plus, what was it, like $136,000 day, and I was only playing with, I mean, only, it's a lot, but I was playing with like 60K bets at a time, and so it was a really good day. It really pushed that account value yesterday, which is great. I know the P&L here is a little more than 136, but that reflects the other long positions that are unrealized, but really, really interesting. So I highly enjoy it. I'm like, I spent so much time studying the market. I'm like, I should be trading off this stuff. And finally, we're like, yes, we are. That's fun. So now I'm gonna go on a vacation this weekend, and I'm gonna spend some trading money. And be like, what could we treat ourselves to? I haven't done that in a while. I'm actually gonna get to take Max and Jack and both their grandpas, and we're gonna get to go somewhere. So it's gonna be really fun. Caleb Hammerstein. It's a little different than what we did with the financial advice than Caleb Hammerstein. This sounds very jaded, but I think most of the Caleb Hammer stuff is designed for entertainment. It is, you know, I think it appeals to maybe like those just out of high school, kind of just starting their careers, a little bit more on like, here, this person's being an idiot with their credit cards. Somebody said that some people are even hired to just say stupid and outrageous things on the show. I don't know if that allegation is true or whatever, and I'm not trying to say anything bad. But no, what I was dealing with is I think the average net worth of the people that hit us up was like $600,000 or $800,000 or whatever, and we had people in there with, you know, $10 million, $20 million, $5 million, you know, and obviously we had people on both sides. So it was, it was. I think it was just a different audience. You know, I'm not trying to say like one's better than the other. It's just a different group of people. So interesting questions. So that's funny. Okay. So enjoy your time with family. Thank you for that. All right. What do you think of UK retail sales going down the pan, yet the pound has actually gained today? I don't know on the daily FX fluctuations, frankly, but, you know, when you get weak data in the U.S., it sort of pretends rate cuts in the U.S., and that's why you get the FX volatility. A lot of people are like, Kevin, you should trade FX, you know, with how much you focus on the Fed. They're probably right. But that would be my guess, is that the weaker durable goods revisions today really are moving that, you know. So, okay. Both their grandpa. Yes, both their grandpas. Did you know people can have two grandpas? Imagine that. Oh, back on commercial there. Crypto.com? Nah. We all know what the market does when Kevin's on vacation. Well, fortunately, it's Memorial Day weekend, and you might not have to worry about that. So, anyway, if you have more questions, I don't want to belabor it too much. If you have more questions, you can always just email us at staff@meetkevin.com. All right, so what else? Let me pull up some caddies here. Okay. Okay. So I sent that off. Okay, I had to do that really quick. My fault. Sorry. Okay, yeah, U of M, 7 a.m. That's really what we're waiting for right now. and then obviously start to trade in 13 minutes. Let's listen in here for a moment, and I do have to go to the bathroom really quick, so I'll be really fast.
Disappointing sales numbers have caused the stock to dip almost 30% so far this year. And joining us now is Bloomberg's Craig Trudell. So Musk, he was coy on multiple fronts. Let's start with tariffs, though, in favor of no tariffs. But how much of an existential threat would cheap Chinese EVs be to Tesla if they actually did come stateside?
Yeah, I do think that it's the case that we don't necessarily have to worry about that threat. We seemingly didn't need to, even under Trump's tariff rates, and now that the Biden administration wants to take the tariffs north of 100%, companies like BYD just aren't coming to the U.S. market. And that being said, I mean, we're already seeing the effects of just how stiff a competition a company like a BYD is for Tesla, and that they've been losing substantial market share in China. And Musk, sort of put a brave face on the state of Tesla's business in China, but they have been losing quite a bit of share. And they've moved, from a approach of having a factory largely for the local market to, transitioning for that to be, their export base globally. And so, the Model 3s that are sold in Europe are largely, coming from China. So this is a case of trying to kind of, separate this idea of just how competitive the Chinese are from whatever Tesla's up to. And that was what Musk was trying to do yesterday.
So we're going to get to a potential cheaper model of Tesla, but let's talk about their existing models and what levers do they have to pull when it comes to pricing. Obviously, we've seen some massive price cuts coming on existing models, but how much juice is left there?
Yeah, they don't have a ton further to cut, and still sort of preserve the margins that you would like to see if you're an investor in the company. That was part of the draw here, was that, yes, you had the tech potential for this company, but also, I think investors generally got used to this idea of, that this was a car company with industry-leading margins, and that is not a claim that Tesla can make anymore. And, I think we're absolutely in a position now where, rather than bringing a brand new car to market, people often refer to it as a Model 2. What they're going to try to do in terms of a lever, next here, is to take the work that was being done on that vehicle and apply it to the existing lineup and potentially be able to offer, a lower price version of the Model Y and maybe the Model 3. It remains to be seen just how excited the market will be about that. We definitely saw an indication that it was what they wanted to hear when Musk, sort of danced around the issue and generally referred to this being their plan on the last earnings call, and we had a big, pop in the stock. But that being said, that was after, the shares really taking it on the chin, and we haven't necessarily seen that run up continue with momentum.
Well, Craig, to that point, what do investors want here? I mean, with shares down 30% year to date, it seems like expectations and sentiment pretty low at this point. What would actually breathe some momentum into the stock finally?
I mean, I think they need to get the fundamentals going to some degree. They need to sort of staunch the bleeding. They need to grow again in short. And it's going to be really hard for them to do that with the existing lineup. And that's why I think, investors are really nervous about the plans that, Musk has been sort of laying for this company, because he wants to take them in the direction of, a robo-taxi model, which is entirely unproven, something he's been talking about for years and failed to execute. And he's not alone in that either. Google and Cruise, the General Motors self-driving unit, it's proven to be a really tough business. It sounds great on paper. It seems like it could be a real sort of, money spinner, putting cars out on the road that don't have any humans in them. But there's an awful lot of technology development that needs to be done. And, at a moment's notice, you can fall out of favor with a regulator and have to pull your cars off the road.
That is true. That is a big risk of robos, for a while at least.
A real boulevard of broken dreams there. Our thanks, of course, to Bloomberg's Craig Trudell. Now let's switch gears.
Yeah, I mean, obviously FSD is the greatest that exists, but I mean, all it takes is one accident, even if it's substantially safer than regular drivers. And no politician wants to have their name on it, so you end up getting canned for a while. It sucks.
Banks that had been more flexible than the J.P. Morgan or the Goldmans of the world, and what's driving some of this is there was kind of a pause on some U.S. Regulations around monitoring employees, mostly in the investment banking and trading world, and those COVID pauses are sunsetting now, and the regulators have put in some practices that would allow people to work from home. But a lot of banks we're seeing are deciding that compliance headache is just not worth it. So they're instead calling employees back. And we've seen a number of banks so far. Others are considering it before things start to change in July on some of these policies. So we could see others follow suit.
Well, just quickly, 30 seconds. I mean, further apart, FINRA has come out and said, this isn't our fault.
Yeah, FINRA is saying, things are changing, but we have set up.
Yeah, this is just a talk about work from home here and the regulation or compliance associated with that. People are blaming FINRA rules when, frankly, they give you plenty of options, I feel like, to work from home, but it's harder for corporations to conduct compliance. So anyway, Q's up 23 bips. They were up as high as I saw 0.3, but it's obviously green. 63 bips here on Tesla. Looks like you actually got a little bit of a Tesla move up during that Bloomberg chat. All right, let's get off the Doom channel. And, oh, they're on commercial. What a ripoff. Fine. No problem. All right. Somebody here says, Tesla has always been broke. It's an SH9T company. Ouch. Green Day Boulevard of Open Dreams. Yeah, it's Broken Dreams is a great song. Let's see, like the dragging the person onto the cars. I mean, that combined with how the company responded to it, they really screwed up in their response to regulators and their lack of cooperation and their attempt to hide certain data. That doesn't go over well with a regulator. That just makes them more upset, and so then those folks basically lost their jobs. But yeah, I mean, the good news is it's not like Elon Musk ever pisses regulators off. He's really good with entities like the SEC and, very respectful, and they seem to really like him. So I'm sure the regulators will push forward FSD very, very easily without a lot of fuss and without massive limitations because they, at least they can substantially trust Elon Musk. Anyway, so how's Elf Beauty doing today? Up 127. Nvidia pushing, still pushing on that 1050. Okay. Let's see here. Faraday Futures 17.6. Okay. Greenwave's kind of, ooh, Greenwave just fell under the 9 cents. That's crazy. That's really interesting. Do you have any interest in storage units? Yeah, we'd love to do storage unit mini funds for house hack in the future. In the future we'll really hit all forms of real estate. So we'll do, residential and multifamily. So single family, multifamily. Then we'll do, storage or warehouse or whatever. Those are all down the road things. Industrial. Probably last. Be a little further down the road. Yeah, it's easier to go from residential to storage units to office, hotel, triple nets on retail before you get to some of the industrials. So, okay. Let's see. What do we got? 4 minutes to go. We've got, Nick T. and the forecast for rate cuts. Okay. Pop in right here. All right. This is how many cuts various different banks are anticipating. Citigroup thinks we're going to get our first cut in July, and we're going to get 100 basis points of cuts in 2024. And Yeah, I mean, only 2 see over 100 basis points of cuts. JPM still sees 3 cuts. Jeffrey 0. 0 over here. SocGen 0. A lot of 50s in there. 50s and 25s, which makes sense. The market's pricing in about 1 to 2. Actually, I could take a peek at the latest probability. Let's take a peek here. World interest rates. Oh, that's pretty lumpy. Oh, wow. We're only down at 1.3 rate cuts right now. Priced in for December, frankly. Wow, that plummeted. That's probably why the 10-2 yield curve moved like that. That's very interesting. Or I should say 210. 210 yield curve, most inverted since December. And then at about negative 46 basis points. And then you also have market now only pricing in 1.36%, 1.36 rate cuts by December 2024. And December being the likely positioning for that. You really only price, well, then again, by September, you're pricing in about half a potential for half of 1 rate cut. September pricing is 0.54 rate cuts, and November pricing, I think, is 0.8, 0.77 rate cuts. That's down from, that December pricing is down from about 1.8 roughly last week. It's a pretty big movement. All right. Next, let's get our music ready. Yes. Yes, we have it. All right, let's listen in.
EBIT growth, but they downgraded to sell because it's going up so much. This is my fear always for an NVIDIA. You come in and people start saying, well, it's going up too much. This is such a great company, and to take it to a sell by Citi is really just to say, you know what? We've had enough. And I don't think it really works like that in a bull market. In a bull market, it rests and then it goes. So do not sell Cintas. It's a great
Didn't they also raise the target as they go to sell?
Yes.
Didn't they go to 570?
Don't do that. And understand that Cintas, which comes on the show, they reinvent themselves constantly.
Good luck trading today. Remember, the next coupon code expires next Friday. You want my buy, sell, trade alerts? No guarantees, but check them out at meetkevin.com. Stocks and Psych, most popular course right now, getting bundled with Zero to Millionaire Real Estate too.
At the NASDAQ, it is Memorial Day Flowers Foundation, an organization that places flowers at Arlington National Cemetery.
As you hear the noise, that when I was living in my car, I was in Sacramento, and the police said, look, if you're going to sleep in your car, please sleep next to the nuclear power plant. We will never bother you. And I always liked that. It was called SMUD, Sacramento Municipal Utility District, and they never minded me sleeping as close to those towers as I wanted to. That's where you go when you live in your car, just for the record.
Yes, get that radiation poisoning. That's very interesting. Okay, very, very, very green day today. Robin the Hood's roughly flat. Monday.com's down about 30 bips. You got the Q's-a-doos. Trying to red candle here. Try to figure out a direction for the day. First, oh, look at that. Tesla tried to break out. Gets rubber banded right back down. Just when I thought I was out, they pulled me right back. AMC wants to recover after yesterday's 10% drop. Woo! Keep in mind you have options expiration today, and so expect some more volatility, and you have a 3-day weekend, so 3 days of theta decay. NVIDIA's going down to 1040. You've got Enphase is still trying to figure out if it's going to go to 119 or not. Neo coming out of nowhere. Oh my lordy. What is going on over here? Neo's up 2%, but some solid green candles here. Nice movements there on Neo. Snowflakes moving up nicely. Green wave stuck at $9. Faraday futures plummeting. Not a good sign for green wave as to whether or not it'll be able to hold on to that 9 pennies. Vertiv going back down, trying to get down there to 100. SoFi's got some nice green candles, but it's still under $7. Kind of wild. SunPower gave up some of its pre-market rally. What else? Apple's trying to get back to 190, though even it seems to be bleeding slightly. SPY's up 33 bips, trying to move up. Lucid up 1%. I heard there might be some staff cuts. Let's see here. Okay, let's go to the top. Ethereum holding on to 37. You've got, what is this? Facebook up 30 bips. Q's bleeding a bit here. Tesla's trying to get back. Looks like it wants to try to test that 175. Nice little U-turn there on the 174 drop. Q. Oh, NVIDIA. Ooh, it just turned red. Not great. I don't know if that'll hold on. I always get nervous the first 15 minutes. Look at that. Right to the 175 line on Tesla. This bounced. I think it was on 180. We had a line drawn yesterday for it. I actually traded this right here. I think I sent a trade alert. I don't know. This was like 189 or 185 or something. And I'm like, I think this is going to 180. Look at that. And it went to 179.32 and then bounced off that 180 line for the last hour of close. I usually don't like trading in the last hour of close. I try to do my trades before that. In the last hour, it turns a little unpredictable. Tesla, I don't know. Is it going to be able to break out of this? Let's see. You know, somebody asked me what I thought Tesla was going to do today. I thought it'd be up like 1% today. It's basically up 1% right now. The question is, can it hold it? Hold it? Q's trying to rotate back up here. There's that 1% on Tesla. Go for the breakout, will you, Tesla? Come on. Give us some entertainment today. Are you not entertained? Oh, look at that. Right on the 1040 on NVIDIA. Super micro bleeds. Ooh, Enphase. Naughty, naughty. All right, let's listen over here for a moment.
Great quarter. TGX did a better quarter than they did. Up 10. I don't know. Go ahead. Just knock yourself out and buy it.
Meantime, Jim, if you're looking at consumer discretionary, nice note out of Schwab today that only half of the components are above the 200-day.
I know. I mean,
some deterioration in that front.
Look, the consumer discretion. Look, we're in burger war territory, right? We got burger wars. We had.
We haven't yet mentioned Burger King matching this $5 value meal.
$5.
AMC's already rotating down.
That is interesting. I think that Wendy's obviously has been the third. Some of that is just because the Baconator is $6, Carl. That's just when my wife buys 1,000 calories, she better pay $5 for that. That is a ripoff. The more calories, the more you pay. It's not paid by the calories, for heaven's sake. Yeah. That's got to stop.
But that is of the components of inflation that get noticed. There's something about quick service. It's a political touchstone.
Yes, it is. That's why do I keep referring to the incredible numbers at Brinker and Texas Roadhouse? Because Texas Roadhouse, they both have the $11 meal. And there are some people on Reddit, and I do watch Reddit, who are talking about that they had a $9 burger at fast food, and that's ridiculous. They're obviously speaking about the combo meal. And Reddit is a great place to see grousing. And that just tells me, listen, if you're going to pay $9 for a combo, go get the $11 and get that margarita at Brinker. They got a great margie. Hey, by the way, their drinks are made with the finest alcohol. Be aware. They do not use what we call the well alcohol.
Yes. Speaking of all this, is a great interview with the CFO of Walmart in Barron's today, where he talks about the ad business relative to their GMV. They could maybe double or triple that business.
All right,
and membership too.
I'm so glad you mentioned that, because when you speak with the people at Walmart, I was trying to get a Walmart versus Target thing going, but Walmart doesn't have the advertising.
I haven't heard this before.
I mean, Target doesn't have it. I momentarily lost my thought because it's very hard for me to think when I have Oclo in my hand or Oclo.
Sounds like a group of sales bros back there.
Target doesn't have. And they also have international, and it's no longer apples to apples. You just can't compare them.
He points out that they sell probably the highest-end laptop.
Elf Beauty and AMC lost their trajectory there on some of that enthusiasm. So are the Qs a little bit right now. Be careful those first 15 minutes of trades. That's why I haven't entered anything. I always like to look. I like to watch. AMC bleeding down. Hood, not really going anywhere right now. That looks like a disaster. Meta's coming down. The Qs are coming down. Tesla, look at that reject. Come on. Nvidia turns red. SMCI is going down. What's the next stop for SMCI? 792? You'd have to have a nasty day to repeat what happened yesterday. And get something like that. Although you are getting some pain there right now. Oh well. What else you got, Jimbo?
Billionaires, I bet they're a dime a dozen. We know. I mean, they got a billionaire. I mean, I'm going to the Hamptons, a billionaire, yes. billionaire. The only billionaire that does not carry himself as a billionaire is Jensen Huang. He doesn't. It's like, hey, what are you doing? You know, he's got, you know, he's a billionaire. He'll say, like, that person's not nice. I mean, sometimes, like, when my kids were little, they would say, Daddy, that person's not nice. Jensen is, like, concerned about kindness. I've never met a billionaire who cares about kindness at all, right? It's like, oh, kindness, that's not worth anything.
There's a look at Wong, who I think Jim owns about 3% of shares outstanding. It's not some astronomical share.
Talk about stuff that he does not care about, and he wants to lead a normal life. He doesn't want bodyguards. He just wants to have fun. He and his wife and kids and Maddie. I mean, you know, they've got these great kids that work there, and you meet them, and you're talking to them. I mean, this is typical Jensen style. And there's like someone who's young, and she wants to help you and stuff. And how you doing? Fine. And then you realize it's his daughter. But they're unassuming billionaires. They're just not like the other billionaires, Carl. And I want people to know that there are people who just have not changed despite what's happened. He is unchanged.
Right, when you work and when you clean toilets at a Denny's, Jim, that stays with you.
No, I remember because I told him I was a dishwasher. And he said, geez, wait till you take a tough job. 3.5% of the company.
Let's do some Novo. What do you say? The study now published in the New England Journal of Medicine about cutting the risk of chronic kidney disease, death from kidney disease.
As we get, now that was a trial that they stopped last year, and as we get more and more of the kidney disease is fatal, more and more of diseases that are fatal that these things go up against, that's more and more will be part of the formulary. More and more the insurance companies are going to have to pay for it. Now, under the Inflation Reduction Act, the government will negotiate the prices. But that was important because the New England Journal of Medicine verifying that allows a doctor to be able to argue, or a person to argue with their insurance company saying, come on, you know, this can save our lives. You got to get it paid. That's what they need, because otherwise we're going to run out of people who can afford these drugs.
Right.
But you know, Lilly is so constrained. You know, they're like afraid to say, "Listen, we're going to start making the drug. We can't. They can't meet demand anywhere." And again, that 100x study that the Goldman uses, I had them on earlier this week. Just said, look, there are elements of choice, and people don't. They want Lilly, they want Zepbound, they want Mounjaro, they don't want Novo, and that's one of the reasons there's just an endless chronic shortage with Lilly, and it's going to last for as long as, I don't know, they can't make it fast.
Would you include Lilly in a modern version of the Mag 7?
Yes, and some of that is because I respect Ken Langone so much. He was the first guy who said he was going to triple. But you have to, because they, you know, Dave Ricks, again, you got these people, they just don't change. Dave Ricks is the same guy. And at Ashkenazi, she's the CFO. She's fantastic. They are just busy trying to meet demand wherever it can. That's like nose to the ground. Let's try to make enough available for customers. And let's not have it so they have knockoffs. The knockoffs will not have success. These are drugs that have to be refrigerated correctly. You have to worry about the supply chain. Lilly has always said, listen, there's only really, you got to be very careful. But that stock is going to have a lot of staying power as one after another. Dr. Gottlieb, who's on the board of Illumina and Pfizer, did say that he expects that they're like the statins. 20% of the people are on the statins. I remember when the first statins came out, and here we're talking about 1987 with Merck, with Mevacor, and people just said, well, you know, it'll never catch on. Too expensive, whatever. And then a few years later, 20% of the country's on it. Could be like that.
Yeah. I actually believe that. I wouldn't be surprised if you have this large percentage of people that are and do end up being on these, just like the heart medication I was talking about.
I think Ethereum is really important. It's one, by the way, that I know BlackRock, Larry Fink, will make it so that you want very much to have control over with an ETF. Now, it is interesting that remember, the SEC was a kicking and screaming on this. The CFTC, not so much. I think the SEC kind of says, listen, if we don't regulate it and let it happen, it'll go under. It'll be like gambling. It's like, it's better to have DraftKings handle it than it is to have what nefarious characters handle it. So you get a little more.
First 15 minutes of trade are almost done. Tesla went for another breakout. It is failing another breakout here. It looks like it's going to go for a third attempt right now. You've got NVIDIA that's running over the 1040 pretty violently here. Look at that violent bounce on NVIDIA after you did have a sell down. And then you've got the Qs that are rotating up here pretty nicely. And Elf Beauty that was trying to break out. It also somewhat failed its breakout. Enphase breaking out as well. Some failed breakouts here. Green Wave lost that 9 cents following that Faraday Futures fall. How is Faraday doing right now? Let me see here. Faraday, excuse me, let's see here. Barnes & Noble down again. Faraday Futures up about 9%. Yeah, so Barnes & Noble, oh wow, I get a little bit of a hit there. AMC can't really get that breakout going either. Yeah, the Qs are like having a hard time getting it up today. But it really looks like NVIDIA is what wants to get it up. I don't know if it's going to be able to, but let's keep an eye on it here. All right, let's keep listening in.
Inflationary on housing.
Right, and I think that the chairman knows that and is trying to figure out at what point does it tip and we get wages lower. And that's why I keep coming back to the number that you need to think about is the only number you need to think about is the employment number. Because you've got to see people say, wow, over 4, it could get bad. Because what you're not seeing, that I thought you would see, is people think of peak in housing, so let's put our house up for sale. That is not happening. There is no big increase in existing home sales. So we can't get it going. And you go back to what Marvin Ellison said, Ted Decker said on the Home Depot call, there's just a dearth of transactions. And that is what we need. We need transactions. You won't get transactions until you have people who are losing their job. And right now, there's a job for you if you lose your job. There is a job.
Yeah. I will say, of all the desks that are looking for weaker prints, Morgan Stanley yesterday, one of their points is looking for leading indicators in rent do show deceleration. Deceleration in car insurance.
Yeah, well,
core goods CPI running negative 3-month annualized.
Well, what's happening with car insurance, I mean, I think we saw that with AutoZone, though they didn't point blank say it, is that people are having accidents and not reporting it because they're afraid their insurance go up, and therefore the insurance companies may not be able to continue lockstep to put their prices up. We are seeing a belief, if you look at Workday today, that companies are not growing, and that's spilling over to Salesforce, which I think is kind of silly because they're no longer in the same kind of, it's not a great analog. But Workday is about certain parts of business not growing, and that's the first I've seen of that. I have to do more work on Workday because it's a pretty good company. But remember, business formation does matter for them. We had people saying the toast should go lower because the restaurant formation isn't occurring.
And look at Intuit now, adding to its its losses in the open.
That's small business.
Intuit adding to its losses. They had earnings yesterday. I want to hear what's going on with Intuit. I actually like Intuit. Oh, wow. Intuit is down 7%. I've been waiting for a discount on Intuit for a while. That's interesting. We'll have to look at this in the course member live stream. Look at that. It's at 612. Oh, under its Fibby, eh? Oh, that's going to be quite interesting. Oh, is AMC trying to come back? Yeah, look at that. AMC's trying to come back. The direction today seems to be up, not down. Broadly. Look at that. Even Tesla's starting to break out right now. And I think on oh boy, if you go to Enphase, you're seeing it as well. Let's go here. What do we got? Yeah, a little bit of a breakout here as well. Okay. Intuit.
Private food line for everything under $5. That puts a lot of pressure on things. This $5 price level is very interesting, isn't it? There's a lot of people who want to roll things back to $5. When Target rolled things back 5,000 products, they did it like they did it before, right before they reported. It would have been better if they had rolled back like a month ago. But I do think that we are seeing rollbacks. I'm saying the Fed is going to win, and that yesterday's PMI was an outlier. The Fed is going to win. They're just not. It's going their way, but it's like the second inning.
Yes.
And it's not the Phillies, the greatest record in baseball. But it's not the Mets. Holy cow! No, this is not the Mets.
If only he were here.
Oh, I did that. Really? How's that?
We think David will be back on Tuesday.
My favorite that he does, just so we know, is like, David, are you paying attention to anything I'm saying? What did you say?
He keeps the ball in the air.
Yes, he does. And David's killing Paramount wherever he is right now. Right now, he's killing Paramount.
Yeah. Maybe we'll talk some box office later this morning. As we go to break, watch bonds. We mentioned that 10-year getting close to 4.5 today, as durables did come in a bit warm, 0.7, looking for a decline. Even X-Trans up 4.10 was a beat as well. Stay with us.
Yes. All right. So, what is going on out there, my friends? What is going on? Let's try the Doomas. Let's see if the Doomas have anything for us. No, they don't. Okay. So, let's see here. Then we've got... oh, is she on?
Industry. I think it will be very important because if the SEC approves these, it really undermines the case that they're trying to make that Ether is a security. And so
oh, yeah, for sure.
It will be very important for these to get forward. We're encouraged by that news.
Well, the crypto industry inching closer to another landmark, the SEC paving the way for the eventual launch of the first U.S. exchange-traded funds that invest directly in the Ether token. Joining us now is Eric Balchunas of Bloomberg Intelligence. And Eric, I know this isn't full approval. That point has been made to me.
Red candle there again on the cues.
Full approval. What is this?
I would consider it just about full approval. We'll call it 99% approval. We'll leave 1% chance for some complete black swan event, but you have to understand that the group that approved the 19B4 is under the same guidance of Gary Gensler. So he's not going to have one group approve it and another not approve it. I've also heard that the other group that's working on the S1s that are not yet approved, they're working on approving them. They're going to give comments probably very soon. There could be 2 rounds of comments. So we're thinking that the S1s get approved between 4 and 6 weeks from now. So we might be looking at a late June, early July launch of these ETFs. But we see no reason that there wouldn't be approval. So I think sometimes people like to get stuck in the technical side of it. And remember, this was a top-down 180. So it's not like one group in the SEC is going to rebel and not approve it.
Yeah, I think we are deep in the technicals here. Of course, you need 2 things. You need 19B4 approval. You need S1 approval. But leaving that aside, like you said, we're 99% of the way there. And let's talk about what the future could look like. Because you think about the spot Bitcoin ETF launches, I think everyone underestimated the demand that we would see for those.
That's also true. The demand for these has been absolutely incredible. Like, really, really good. Finding direction here on the market is just very, 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 very difficult right now. Look at this. Look at this insanity that we're getting. This is on the Qs right here. Cannot get a direction on the Qs. Cannot get a direction on Tesla. I mean, it seems like you're averaging up, but this is a weird day. This is like going all over the place here. First 20 minutes, little crazy daisy here. Holy smokes. Look at that. Qs now rotating down more. Just sort of watching some of the option premiums on my phone, and I'm just like, oh, okay, wow, this is quite fascinating, but okay. So yeah, Q's continuing their leg lower here, my lord. So it's, but then again, look at that. Now you're getting the bounce on Nvidia. I'm telling you, it's bizarre. So I don't think the market has made up its mind as to which way we're going. And I certainly haven't made up my mind as to which way I think this is going. I think if we break here about 454, we might be heading a little lower today. But we'll see. Just trying to create like a little rough, little 1 minute floor over here. Kind of dangerous to play with the 1 min. So usually I look for like a 5 minute trend. You know, something that you can just sort of draw and at least pay attention to, so that way you can mentally think, okay, like Yeah, let's draw this a little closer. The ones help for making it too. But that way, at least we can look at something and have a reference frame where we're like, okay, so are we getting worse or are we getting better, right? It's tough to tell. So these trends very interesting though. I mean, you had 7 minutes of up, and then it seems like you're averaging 5 minutes of down right here. It's wild. So Tesla, you might get like nothing today in terms of just like no movement or little movement, but I have no idea. Still too early to say. Yeah. Nvidia's stuck at 1040. Tesla stuck at about 176. It's trying to push up. Robinhood's a little positive. AMC couldn't break out either. Faraday Futures is bleeding. Greenwave is bleeding. Or was, at least last time I checked. Yeah, Greenwave bleeding. It lost that 9 cent. As soon as it lost that 9 cent, it was down. Then, so Palantir, Amazon, none of the largers are really moving. The Google, Amazon, Microsoft, if anything, they're somewhat bleeding. Microsoft sideways, Google sideways, AAPL sideways. What a crap day. Well, you've got University of Michigan. Oh, you know what? You probably have to wait for the University of Michigan Consumer Sentiment Report. It's possible that's what's going to give you direction today. So you could start making some bets on maybe market directionality based on what happens with consumer sentiment. That might be a way to play this. You've got, let's see here. Yeah, look, Nvidia oh, look at that. That's a fat old red candlestick right there on Nvidia. But just a minute candlestick. Enphase is the slow breakout today. Not very violent, which makes it a little tougher on an options expiration day when you have sort of these software. Look at that, see? This is, like, I don't actually see this as a technical tool. I see this as more of just like a reference point for me. Like, okay, all right, so like, are we averaging up or are we going to break that? And we just broke down. So I think you probably just have to wait for sentiment, because you could go bullish on trades today, get a really bad sentiment read that the market reacts poorly to, and it's over. That comes out in 5.5 minutes. So I think that makes sense in terms of why we're getting this sidewaysness. But anyway, so we'll wait for Michigan in a moment. Some other things that are worth talking about. Waller from the Fed sees the neutral rate potentially trending up rather than down over time. And that's not too enthusiastic. And so you've got super micros trending back down. What else here? Trying to see what other... Yeah, there's too much nervousness going into the consumer sentiment to really do anything here. Okay, let's see here. Remember, if you want, or if you have any questions for those courses on building your wealth, trade alerts, whatever it might be, Zero to Millionaire, real estate investing, you name it, send me an email at staff@meetkevin.com. We are now 4.5 minutes away from the consumer sentiment survey. You could write these down if you want, just so you have a quick reference point to see if there are beats or not. We're looking for 1-year inflation to come in at 3.4. That's going to be down a slight lick from the 3.5 we had last time. Looking for 3.1, which would match the 3.1 from last time. And then on a sentiment, we're looking at 67.7, slightly up from last time.
I'm going over all the different. I'm hitting everything. Everybody's come public. By the way, I still like that Reddit deal, and I still like the ARM deal. Those were two of the most exciting deals of the year, and they're just going to stay good. They're good stocks.
Well priced, right?
Yes, they did it. They did both really well, and a lot of that is because they have very canny CEOs who recognize that who matters are the shareholders. Really terrific people.
Jim.
Wow.
Great long weekend.
You too, and maybe David Faber will come back from assignment.
I think he might.
Yeah. Look at how bearish this is so far. You just multiple failed breakouts now on Tesla. I mean, I know that some of these are just on the 1 minute, but even if you go to the 5 minute, that's a failed breakout. And so now you're breaking under 175. Apple's trying to push up. Nvidia is just consolidating. Google's trending down. Microsoft's sideways. Faraday's about to like go negative. That's crazy. Momentum's gone. So momentum's gone. Okay, there we go. Qs are trying to come back. It's like it's only Apple trying to save the day right now. Is Enphase? How's Enphase? Yeah, see, I mean, tough. Bounce on VWAP. Okay. I don't know what happened with Apple. Did we get news out of Apple? Because nobody's behaving like Apple is right now. What's wrong with you, Apple? What has occurred? Okay. Come here. Come here, Apple. Oh, how interesting. Nvidia slashes AI chip prices as Huawei launches China discount. Nvidia and China mirrors Apple and Tesla, where they're locked into price wars. Abundant supply, forcing it to be priced below the competition. Nvidia cuts China prices. It's just China prices that were cut. H20 chips are being offered at a discount. Blah, blah, blah. That's very interesting. No, I don't see any news on Apple. And, you know, it's just the market being the market. Apple was upgraded by Dan Ives. Bro, Dan Ives lives on, like, CNBC and Bloomberg. And he's got those colorful jackets. It's pretty memorable. But, yeah, he's quite bullish. So good for him. I saw a debate between him and Ross the other day. I thought that was kind of entertaining. What was it? I think Dan was calling Ross bearish on Nvidia, and then Ross is like, "Hey man, you're just an analyst. I actually have clients." And I'm like, "Oh," and then Ross is like, "We're bullish Nvidia. It's a big portion of our portfolio, but we've got to, you know, we've got to manage the size of it and our expectations." Just like the fight was really interesting. I'm like, oh, fireworks, fireworks. 1 minute to go. 1 minute to go. 1 minute. Here we go. Dresses like Easter every day. That's interesting. I've never heard that reference before. All right, all right. Here we go. Qs are at 29 bips. Let's see what happens. Are we going bull or bear? I don't know. I don't know. I don't know. But we're about to find out. All right. 15 seconds. Here we go. Bum 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 bum. Sentiment comes in positive, and the inflation reads come in lower. That's good. Very good. Very, very, very good. I like that. Those are good numbers. All of the numbers across the board are juicy. So I like that. Let's see if the market reacts positively to this. I suspect it probably will. Let's see here. Let's go. Okay, so let me read out the numbers here for you. So the 1-year inflation expectation came in a little lower than expected, by about 0.1 lower. The, hold on one sec. I'm going to send a little alert in the stocks and psych group. So there we go. Okay, is that in? Yep. Okay, so I just sent a little alert there because I was waiting for a little catalyst, and I got it. I don't know how long it'll push, but we'll see what happens with the market. So we got a beat on consumer sentiment, 69.1 versus 67.7. Current conditions beat at 69.6 versus 68.8. University of Michigan expectations came in at better than expected, 68.8 versus 67. 1-year inflation comes in 0.1 lower than expected at 3.3, and 5 to 10-year comes in at 3.0, which was also 0.1 lower than expected. Yeah, we'll see what happens here. Okie dokie. So, okie dokie artichoke, as we like to see. Let's see if the market is going to be bullish on this. It looks like you've got Nvidia's still struggling, Apple's still struggling, Google's still struggling, Enphase is trying, but it's a little on the slow side. Even the Qs are giving up a little bit right here. You've got Tesla. Tesla's trying to push out. This is good news, though. You've got Supermicro's mostly sideways. BT Sizzle sideways here. Let's listen into CNBC what they've got to say about it.
Finally, 5 to 10 year, same dynamic, smaller dose. 3.1 mid-month now becomes 3%. We see yields moving down a bit on those, and even though they're still a long way from 2%, the Fed's target, they are moving in the right direction. Carl, back to you.
All right, Rick, really important. Thank you, Rick Santelli. We're 100 trading days into 2024. The S&P up nearly 11%. Some data from Nicholas over at DataTrek showed that those gains have mainly come from just 9 trading days, 2 of them this month. And Mike, you can see the spike here on some of that relief in one-year expectations.
For sure. I mean, for one thing, it's pretty much always the case that returns are lumpy and they're erratic, and most days kind of offset one another. And then you have the big moves that move the needle. I do think all of this stuff is a reminder, basically the sensitivity to every little move in yields. And yesterday's action where you had this unequivocally strong result and response to NVIDIA that didn't really have a lot of broad positive impact, mostly because the rest of the market has been dependent on that soft landing mix of numbers having to come in. That's fostering this idea that we can broaden out the rally and that the benign interest rate and economic environment can stay in place. So I don't think anything really was out of bounds yesterday, but it does sort of show after 4 weeks, we were up 7% in the S&P, volatility levels very low, ongoing worry or at least low-level attention to the softening of consumer activity. Consumer cyclical stocks have actually been quite weak on a relative basis. And then all the rest of it was, well, the AI theme is still there, but what else do we have? So I think that's where we are in terms of trying to digest a little bit of this move. Carl, you know, I've been talking for a while, and Leslie too, about how the April pullback was like the minimally acceptable pullback to take some of the steam out of the market, but it wasn't like a full comprehensive reset where people got worried and took down their exposures. And so I think you have a fully invested Wall Street with a pretty upbeat and comfortable view of the macro, alongside the enthusiasm around AI. And you know, we're trying to figure out where the equilibrium is there for valuations.
Yeah, we talk a lot about the broadening out of the market. B of A had some stats this morning. They screened the S&P 500 for stocks that saw the largest increase in ownership breadth.
Right.
And that's measured by percent of funds owning each ticker. 9 of the 10 were AI or tech-related names.
Well, yeah, I mean, it seems like you have to be in those. It's where all the cash is, man. It's where the dollar dollars are.
It does feel like even though we're seeing things broaden out, the actual ownership breadth, where that's becoming broader, is still in these thematic areas.
It shows you there's a scarcity of conviction, except in those select identifiable areas where you have essentially these dynamics that are not so linked to the cycle and not so linked to what the Fed is going to do. And, you know, the breadth of the market has operated at the pleasure of the bond market for the entire span. When yields have been coming down, as they were after the February report from NVIDIA, they actually peaked and started going down. Then we had a nice broad rally after NVIDIA. It wasn't because of NVIDIA, it coincided with it.
Yeah.
In general, your take has been that the market would prefer to have positive surprises than negative, even if you get a short-term bounce on lower inflation expectations. In that respect, I guess, what's your feeling about the current set of data, which has been a little negative?
It has been a little negative. I mean, I think in the short term, we basically are reading a lot of the things like the manufacturing comeback and the prices paid numbers as a little bit unhelpful to the Fed's cause. So I do think we're fine to have just a patient Fed that keeps rolling ahead its estimate of when we're going to ease on the first time.
Tesla kind of keeps trending up, by the way.
As long as it seems like things are ultimately inflation-wise going to move in the direction they need them to move.
Yeah, it sounds like people are willing to be patient as long as they're not patient for an ultimate hike. the next direction is lower. Let's get more on where this market goes from here. Joining us is Scott Kroner, U.S. equity strategist at Citi. Scott, thanks for being here. We were just talking about this dynamic in the market. You think it's moved back into euphoria and believe some short-term caution is warranted at these levels. What are the indicators that are kind of flashing that euphoric sign for you right now?
Well, the setup actually is kind of interesting listening to Mike's comments, is that we're not too far off of where we were at the end of Q1 going into Q2 when we had that 5-6% pullback. Going into the quarter, we had our panic euphoria model going into euphoria. At the same time, we like to look at valuations, but we focus on what we call our implied growth expectations, which had gotten extended versus where consensus growth is or was at the time. Well, we're back to now where both of those readings were headed into Q2. So from our perspective, the risk reward looks fairly balanced from here. We completely get it. There's a new growth driver in town, courtesy of generative AI. That's been a discussion point for the better part of the year. And what you're seeing, in our view anyway, is a lot of bifurcation under this index surface between companies and then sectors that are perceived beneficiaries of the longer-term new growth trend.
Yeah, clearly the tailwind for those.
It's very interesting. I mean, yeah, okay, longer-term new growth trend, whatever. It's very interesting to me that with these good sentiment numbers, you're still struggling to really find a direction here. A lot of volatility after the numbers. Look at the 7 o'clock time here. It was up, then it was down, then it's up, now it's down. Look at NVIDIA. NVIDIA's losing that line, which is also the lead, by the way.
Lost the lead.
There you go. You've got Google sideways. Apple can't keep it up. Microsoft turned red. Enphase cannot keep it up. The Qs are really trying to keep it up. That's like the only play right now that I see that's actually pushing, while some of these others just keep giving up. I mean, here it'll come back, but you know, you're getting these nominal movements here, and a lack of breakouts. Just doesn't seem like it's one of those days you can really bet on moonshot movements here. Just very, very low energy today. It's like the market needs a cup of coffee or something to get excited about something. Tesla is staying nicely above that 175.60 line. Hey, look at that. AMD right back at its 164. That was like straight back to 164. And now it's pushing through it. Here we go. Okay. Q's trying to, come on, Q's, you can do it. Super micro, not really going anywhere. Snowflake. Yeah, I don't know. A little toughy. But yeah, look at that. Again, with the NVIDIA. Just cannot keep it up today. Google, Apple, yeah, Enphase. Oh well. All right, let's go. Ooh, there's AMC. Let's listen to the doomers for a moment. Is Meta moving? Where's Meta moving? Up or down? Meta's moving up. Okay, that's nice. What's Intel doing? Intel's got a nice move here. That's good. Good trend on Intel. What about Dell? There we go. Look at that Dell movement. 5%. Wow. Okay. So maybe you're just looking in the wrong spot, Kevin. But there we go. Google's finally coming up again. The numbers should be bullish today, so the direction should be positive. I think NVIDIA is just not feeling as much of the love anymore. It's not feeling the spirit. Yeah, look at that. Nice moves there on Tesla. So let's write these up top here. They'll all sort to the top that way. There we go. So Tesla, Dell, little red candle there. But otherwise, Meta, Intel, Dell, and Tesla seem to be moving. And NVIDIA is just going to bleed, eh? All right. Let's listen in here.
Water business that they're going to be making public, we're going to want to take a look at that. May not invest in it, but certainly want to take a look at that because we think at a macro level, that segment of the market is of interest to of interest to us here at Clear Harbor.
Qs are moving.
stuff. Really enjoy speaking with you. Have a great weekend when you get there. Our thanks, of course, to Aaron Kennan of Clear Harbor Asset Management. Let's take a quick look at what's moving underneath the markets now. We're going to do that with Bloomberg's Denitsa Seikova, and a bad day for workday.
A really bad day. As we said earlier, it's the worst since March 2022. The company is suffering after it announced lower expectations for subscription revenue. Even though this quarter numbers came in line, this is not enough to bring optimism to investors. Subscription sales are projected to be significantly lower. That, of course, is a key metric for the company, which provides software solutions for managing personnel. The CEO is trying to bring optimism, saying that they're expanding internationally, going into new US sectors. But you can see that on the street, the sentiment is very pessimistic. Bank of America just cut their target, and overall the price action is quite rough.
Yeah, down double digits for workday, and things don't look too much better when you take a look at Intuit.
Yeah, interesting enough, Intuit had a pretty strong earnings report. It actually saw a big increase in higher-end tax customers. But where investors potentially see concern is those lower-income consumers that access the tax software for free. Their numbers are falling. So the competition for that part of the tax software space is getting more complicated. 10 million people use TurboTax for free this year. That is 1 million lower. So that is definitely bringing concern to investors.
Yeah, big time. Intuit shares down about 7.5%. And newsflash, Wedbush is bullish on Apple. Who would have guessed?
Yeah, that's the highest target on the street, 275 currently. And something that investors would love to hear, it's based on AI. They say iPhone demand turning the corner into an AI-driven iPhone 16 super cycle. Obviously, that has been a big issue for Apple. Everyone has been criticizing them that maybe they're a little bit behind. There has been concern about revenue growth. There has been concern about demand in China. And now we're seeing a strong month for Apple, the 10% up in May after a really rough start to the year. So potentially their deal with AI could bring optimism.
Yeah, remains to be seen. Great roundup as always. Our thanks, of course, to Bloomberg's Denitsa Seikova. Meanwhile, the G7 finance meeting underway in Italy. Finance ministers and central bank governors are gathering to discuss the issues facing the global economy. Along with them is Bloomberg's Oliver Crook, who joins us now with a special guest for an exclusive interview.
That's right, Katie. Thank you so much. Yes, I'm very pleased to be joined by Joaquin.
G7, not really. Sorry. Oh,
my dream
commercial. What is this? All right. Okay. All right. So, let's see what the day brings us today, eh? So, we have, the Qs are holding on to that green, and, somebody in the chat said it, and I agree with them. This should be good, this sentiment survey. Like, I'm not seeing enough movement on NVIDIA to really play NVIDIA today, but I'm seeing movement on Tesla and probably less so on Enphase. Both of those obviously are interest rate sensitive, but I'm not seeing a lot of really good directionality here on Supermicro, not getting a lot of good directionality on NVIDIA. Those might have been yesterday's plays. But the Qs are like nicely and slowly moving up, some slow progression over here, so I like to see that. And then it looks like Tesla's really trying to continue this breakout. So I'm watching Tesla, I'm watching QCOM. If you're in the Stocks and Psych group, I sent a few alerts this morning, actually a couple. It looks like I'm also watching Meta. Here's another one that just wants to keep legging up. Now, I wonder why. Let me zoom out here for a moment. So on Meta, I don't know exactly where we might be trying to go here. Kind of mid-range, honestly, on the recent pricing here. Qs keep moving up, which is good. Good, solid uptrend right here that's going to be supportive to calls. And it really looks like that Michigan survey was the directionality at least some stocks needed. Look at Dell, though, also. Dell, really good movements here on Dell, so pretty impressive. Is Dell trying to get anywhere? No, it's all at all-time highs, so I don't know if it's exactly going anywhere in particular, but It's one to keep an eye on, as well as QCOM. That's another one that's moving nicely. Supermicro now moving up. Also interesting. It just looks like you got sort of, yeah, it's because NVIDIA's finally breaking. NVIDIA's finally pushing that line. So good for NVIDIA. And then, yeah, I don't know, what else is anybody seeing out there? First Solar, somebody says here. Okay. Then you've got, we'll take a look at that in just a second here. What about, let's see here. What kind of candles are we getting here? A little bit of red. Starting to get a little bit of red there on just Tesla, for example. Let me go to the non-average just so we can see the non-average. Yeah, not really so much on Super, Qualcomm. A little bit more on Tesla there. Dell, you're seeing it a little bit. Intel. NVIDIA's stuck. Let's listen it over here.
A tick up, and the vast majority of those are going to be on Pro, and that's important because that's an ASP
there he is.
lift.
There he is again with the pastels.
Political issues that you're seeing, no doubt. But I think some of that started to calm down, and this goes into what I believe is going to just be a massive AI-driven super cycle that starts with the iPhone 16. But services is key. And Mike, like we do about valuation, I think services is the key. That's where a lot of the bears, what they've missed in Apple, is that services valuation.
It's been an interesting week in autonomy, given the blessing that Jensen Huang gave autos in the call for NVIDIA. You think it was a mistake to cut the cord on Project Titan? Will they regret that later?
I think that's probably the best move they ever made, because ultimately Titan was never going to work. That was going to be an Everest-like uphill climb without oxygen. And I think when you look at for Apple, it comes down to AI. This will be a historical moment, and I think a historical period for Cook and for Apple. And of course, right now, if you look, AI being led by the godfather of AI, Jensen. Look at what Nadella is doing in Redmond, of course, Google. But now this is the drum roll for WWDC, where for most consumers, they will access AI through an Apple device.
What is it that AI could do for those consumers who haven't upgraded their iPhone, that they say, okay, now that is technology that makes me want to buy a new iPhone? What is it that AI would do to kind of incentivize that behavior?
Yeah, I think the key focus points are going to be developers are going to build AI, generative AI apps on Apple's ecosystem. And a lot of these, the functionality from an LLM perspective, the OpenAI partnership, they will essentially work on iPhone 16 and further, and what will happen with iPhone 17. The other thing is that a lot of the actual features that come through, you will not be able to do on a pre-iPhone 16. So this is going to be just a main event because it starts what's really going to be on the services side. And a lot of those apps, as you buy them, who's getting the revenue? I mean, Apple's getting a big
so what you're essentially saying is that Apple is the conduit for a lot of other people's AI innovation, and that's how consumers are going to tap into it. It's not that Apple itself is, going to come out and say, we got the special sauce.
They'll take their bite. And of course, being led by godfather of AI, Jensen. But even though Apple's late to the game, when you have 2.2 billion iOS devices, the ability now from an install base and the services side, that's why this is an event when they unveil. I don't view that this is when you come back from Apple Park June 10th being disappointed. I think it starts, it's going to be a historical move for the stock.
You'd rather have Cook's hand right now than Nadella's?
Look, Nadella right now, in the Mount Rushmore of AI, there's the godfather of AI, Jensen, and Nadella. But I do believe when you look at Microsoft, the path on that stock, there's no speed bumps that I see. I mean, I think probably the first one to hit $4 trillion will be Microsoft. Because of AI, because of what we see on the enterprise side.
Fewer geopolitical supply.
Fewer geopolitical. Antitrust is not an issue. That's why right now at the top of that mountain is Nadella. But when you look at Cook and Cupertino, this is going to be the start of a renaissance of growth. And I think we're going to look back. This is Meta 18 months ago. The point is, like, sentiment's awful from an institutional perspective, retail skeptical, but this will be another flex the muscles moment for Apple, I believe, over the next 12 to 18 months.
All right, we'll talk to you then, if not before, Dan. Thanks.
Thank you.
Yeah, I don't disagree with him at all. I think, Apple really got written down substantially there. And somewhat maybe even unfairly, dare I say. It was I mean, I was bearish there for a minute too. I'm like, I don't know, man, this makes me nervous. And once I read their paper on AI, where I'm like, oh, I see what they're trying to do. They're trying to do on-device AI. I made that Apple video, which not a lot of people watched. It's surprising Apple videos don't get as many views as, like, let's say a Tesla video. But you know, I went into it and I'm like, this is good. Like, this makes me want to buy more at 169. And so that Apple paper they leaked was in my opinion a really good catalyst there for the stock.
Catastrophe to giving up on that.
And while you mentioned your mandate, there was this big speech that
this is gonna be a little boring. Okay, so little quiet right now. Otherwise, on you know, Nvidia's kind of still stuck. Really tough day for direction, honestly. A little annoying is kind of the way I'm putting it, but it is what it is. So you know, even QCOM is topping out right now. Q's topping out. Super Micro is you know, not moving much. Dell's moving, but you know, even it's just showing up a little bit of a red candlestick. So let's see what happens with Dell. Really need some volatility, some like enthusiasm, some excitement to come back. Like, come on, Tesla, like pump it up, you know? I don't know. Dell, yeah, see, you can see the Dell rotation down right here. Michigan sentiment should help Tesla the most, but you know, who knows? Everything else seems to be very fussy. Intel's moving nicely though. Nice green candle there on Tesla. Then you've got what else? Apple, Enphase trying to move up here. Not bad at all. So, and then a little bit of a yeah, red candle there on the Qs. Okay, very good. So I think with that, we're gonna go ahead and push the button, make coffee, and go to the Course Member Live. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right. There you have it, folks. Remember, next coupon code expires May 31st. Email us at staff@meetkevin.com if you have any questions, and we'll see you in the next one. Have a wonderful weekend, everybody. Goodbye.